Okay, hi everybody. I'm just doing this recording simply because obviously I know a few people had a few sound issues. I just want to make sure that obviously everybody can see what is going on these charts properly. The recording I did last night wasn't so clever, so obviously I'm doing one again to start from scratch. Okay, so obviously this is a long-term time frame trading strategy. It's not about getting rich quick. I'm not going to say you're going to be a millionaire in a year or anything like that, but this is a consistent way to make profits on a very good risk-reward ratio. Okay, so
just know Russia's February CPI lower than expected. The year-on-year rate's about 1%, 0.3 below expectations there for the Russian CPI.
But let's just turn that off. Okay, so as you know, with the euro, it's in a massive long-term downtrend since 2014, down from 140 to the lows of just above 104, and there's been no bounce whatsoever in it. As I always say, that for the market to turn, it takes a long time. It's like a big tanker, a big oil tanker in the ocean. It doesn't just do a 360-degree turn and straight back the other way. So, the market isn't just going to go down like that and then go up like that. That's not how the market works. Okay, it takes a little bit of time to consolidate, and also for it to build some accumulation, and also to then obviously release the move a little bit higher. And what we're trying to look for in the market first is some kind of pattern as well. Something to show that maybe the market is trying to turn. So this is a weekly time frame, and I've been watching this for a few days. And when we started to come in, we started to bounce around, and I knew we're trying to consolidate, which it consolidates for two reasons: either consolidates to make ready for a move lower, or consolidates ready to accumulate to have some kind of slight reversal. I'm not saying euro is going to get bullish. I'm just saying that it looks at the moment that it's you want to be buying euro, not selling, and simply because you've got a bottom over here and also a bottom over here. Until this is violated, this shows that a double bottom is in place on a weekly time frame. Double bottom over here, consolidation for multiple weeks, 1, 2, 3, 4, 5, 6, 7, 8 weeks, and then a breakout and a pull back into the support area. Okay. So basically now, this is the daily chart. You can see the double bottom. There's one over here and the longer one over here. There's also one here, which obviously would have been another move that we could have traded, but the longer term view is this is looking bullish. Okay, I'll just zoom this in. And I'd been watching this. I'll just change colour for this. I've been watching this in here. This triangle formation, like wedge pattern, building tight. Getting really, really tight, although we wanted to break out. And what I look for in the market is a few things. I either look for us to create a new low and close somewhere in the top 3/4 of the bar and have some kind of buy stop above. So if we're, this would have been probably one here. I'd seen the double bottom confirmed, and I need to change colours again. So we can see, I probably would have traded this one here, made a new low, closed in the high, buy stop above, or would have had a little bit of follow through. Probably would have been stopped out later. So this is what it is. I mean, I lose, up to 50% of the time. Okay, but because the stops are 40, 50 pips, and each gain on a good trade is 200 to 300 pips, the winners way outdo the losers. I can afford to have 5 losers and 1 winner would outdo all the losers, so it doesn't matter. Okay, it's not about, traders seem to want to win all the time, and that's not what it's about. It's about consistently being able to make a profit. And if you know you can lose actually 60% of the time and only win 40% of your trades and still make 300 to 600 pips a month, then surely most people must like that. Okay. And we had this, it's like consolidation inside here, and obviously we shook everybody out down here, and I would have had a buy stop again, probably somewhere above this bar. And I only leave it valid for 24 hours, so if we don't break it on the next thing, what I want is for this to be busted and for us to accelerate really quickly, like something like over here. Okay, if it doesn't happen in 24 hours, then to me it needs a bit more time, and we just need to sit and wait for it. Okay. And basically, obviously we had this large move up here. Yes, we could have sold this with a little bit of risk because we made a new high and also closed in the low here. We could have had a sell stop below with a stop loss, somewhere in the middle of the bar. We retested it first and then broke, and 2 days we were down from 112.70 to 111.50, so about 150 pips or so. Okay, and that's what you want, these fast moves, bang, straight out, low risk reward, 2 days profits there, risk trades in, no risk. Okay. But I wasn't sure whether this was just going to consolidate, pull back a little bit and then continue, so I didn't take it long. I actually looked at this as a long over here, so let's make a new low, close at the high, I put a buy stop above, but weren't triggered. There was no risk on the trade, it's continued down. Okay. And then the other day I'd been watching Swissy, I was already in a US dollar Swissy trade because the setup looked a lot better than Euro. And when this actually confirmed and did the same thing, we made a new low down here. Okay, and we're closed near the high of the bar, and I put a buy stop above. The buy stop was set at 108.84, so about 4 pips above the high of the bar, and the next day we'll retest a little bit, and then bam, we've gone straight through. Okay, I've now set the trade to break even. I might raise a little bit more to break even plus 5 pips or so, but we've had one bar follow through, and I'm waiting for a second bar follow through to take us into the mid 110 somewhere. Okay, that's what I'm thinking. Okay, so these trades are really, really low risk, and with potential of huge gains. Eventually we should be coming back up to test this 113.50 to 113.70 area. And I do think on the longer term, if you want to know that, I think you will be between 117 and 120 in the months ahead. Okay, I think there's going to be a weaker US dollar, and we can look at that a bit later on. Okay, so I just flip over to US Japan. Okay, on the longer term views of this, we've been talking about this as being a mega bear. Again, we're looking for reasons why on a weekly time frame. You've got one double top in here, okay, which is a bearish formation, with the neckline here which was broken, then consolidated, and then came back up and retested, and we're breaking away. But also it's a dual bearish pattern, a left shoulder over here, a head here, okay, and a right shoulder over here, with the neckline coming in at about 116 area across there. Okay, and we're breaking everything. We broke it all. So there was a gap between 112, I think it was 112.38, about 112.55 or 112.60, and this is what once we broke this low, I thought we'd probably come and fill this gap from back over here, because markets hate the gaps. Okay, at the moment I still think it's a bear, but I'm a little bit concerned by. I'll flip it over to a daily in a moment, but I saw this here. We came down here once, bounced, and then we came back down 2 weeks later, and we've been supported again. Okay, so at the minute it looks like it wants to make a slight up move. Okay, we've got a daily double bottom now. Here we made a new low, closed at the high. Could have looked at this as a long. Okay, it's confirmed. Buy stop above, 2 bars straight through. This is the move that should happen. What if you have a buy stop above and the breakthrough, the moves 1 or 2 days, it should be 150, 200 pips straight up, and the trade should be clear. And when we put this sell bar inside the range of this bar, I thought, we're going to come back down and just bust a low, but it's not going to bounce. But again, we put a new low, closed at the high. I put a buy stop above this bar, got triggered, and then I got stopped out for I think it was about a 40 pip loss, I think. but I looked at this and saw across multiple yen pairs that it looked like we were going to bounce. Okay, it's about looking at the bigger picture, not just overall. I'll just flip across the pound yen because that was another trade that we Great British pound yen. Okay, again weekly pattern, big bear. Okay, shoulder, head over here, right shoulder, bust to the neckline, through here, retest to the neckline, and carried on lower. So again, big bear pattern still in play. But on a daily time frame, when I saw the double bottom in US Japan, I saw the double bottom in CAD yen, and I also saw this pattern on here. Okay, we had a fallen wedge, which in a downtrend like this, in a very steep wedge like this, is a bullish pattern, especially if we can break out the other side. Okay, and I saw us put a bottom in here, saw us break, saw us come down, and it's a bit hard to tell on this particular bar, but we actually did make a new low on this bar over here, and we'll close right at the high. And also when we close right at the high, we've busted out of this fallen wedge pattern. So I put a buy stop above. The buy stop was at 159.61. And we came up into 161. What? We hit 161.40. I actually closed the trade out. I closed it for about it was equivalent of 140 pips, but I recommended to my subscribers and members to take a 0.5% risk on this trade and 0.5% risk on US Japan, so it was equivalent of one overall trade, 1% risk in total. They lost, I think, 35 to 40 pips on US Japan, made 140, obviously half the risk, therefore half the gain, so it's worked out about a 70 pip gain. Okay, so we made 70, lost 40. It was still in net. Maybe I should have left this running a bit longer. I just saw this trying to turn around, made a new high, and we're actually coming down to the low. And I just said, look, let's just get out. But really, once we've done that, the stop should have been moved to here to about break even. Let it run, see how this continues, and then once this day is closed, you should be raising the stop under this daily bar. If it goes through again, next day, raise the stop again, raise the stop, in case we just went on a credible move and we didn't really want to miss it, okay? But that's, that looked fairly good. Now I'll just put up CAD yen, just so you can see why I was looking at multiple yen pairs all at the same time. Again, it's in a bearish pattern overall on the weekly, but daily, you've got a double bottom in place, completely confirmed. Came over here, we traded this the other day, we made a new low, closed at the high. Okay, put a buy stop above. The buy stop was 81.99. One day, bang through. Second day, bang. You're talking, a 240 pip move in 2 days. We got out of this. I did raise the stop under here. I kept raising it up, and when I saw this sell bar inside here, I thought, that's it, we're going to come back down, and we got out the trade for 185 pip gain on this particular trade. We've made a new low, closed at the high, and now we're consolidating, and this normally means it's building up momentum for a bigger move. Okay, I recommended when I did the webinar last night that you could put a buy stop somewhere above here, probably in the region of about 85.25. Stop loss would be about 84.35, 84.25 or so, about 100 pips, and the target would be 200 pip high. This will be only a 2-to-1 risk reward, between an 80 and a 100 pip stop for a 200 pip gain. Okay, coming to test this high here, and if we bust it, we could potentially go a little bit higher. So again, it looks on multiple time frames across multiple pairs, CAD yen, pound yen, US Japan, all looks like the day that at the meantime want to go higher, and that was the reason behind. Okay, we're looking for a confirmation in the pattern and then a confirmation in the bar. So it's like insurance basically. We're not just taking one or the other. We're not saying, double bottom, let's just go along. We're not just saying, let's see a bar, let's go along. We're looking for multiple reasons to get into these trades. Okay, Let's flip over to Australia. Everybody's been mega bearish on this thing, and I did a webinar last week and recommended that not to look long, not to look short. Sorry, you should be looking long. Again, a huge downtrend from 106 to 68. A double bottom doesn't mean that it has to be completely in line. It can make a new low as well. So I looked at this on a weekly time frame. Saw us consolidating for multiple weeks. That we're actually trying to put in a double bottom, trying to consolidate with this double bottom here, and was confirmed on a weekly time frame. I'll put up Euro Australia afterwards to show that obviously in reverse you're looking for multiple things. If Australia looks long, Euro Australia should look short, so you should be looking at things to line up. And the other thing is that when we came down, we consolidated for many weeks, many weeks across here. So we bounced multiple times, and normally what I say, when the market attacks a certain area so many times, is it'll only hold for so long before it breaks out the other side. Okay, so we'll bounce around for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 6, 7, 8, 9, 10, 21. Nearly 22 weeks, okay? Nearly 5 months they would bounce around this, and once this broke, there was no going back. Look, it's bounced. So for those of you who are fairly new to Forex, anything that was once supportive will always become resistance, because it's always remembered, and anything that was once resistance will become supportive. So when the market comes back up here, it's going to have some problem getting through this 76 area, okay? But I think that's where we are headed. Okay. Well, again, we've been attacking this area for some time while we've been consolidating this 73.80s to 74 level, and it really looks like we're going through. And I told people, way when we were down here, I said that the weekly double bottom is in place. It's confirmed. It's also okay. We've also had these bars, which show the market is trying really hard to shake people out. Reverse, made a new low, closed at the high. Okay, breakthrough, 1 day follow through, just a little bit. Okay, made a new low in here, closed at the high. Would have got triggered if you traded that in there. Made a new low, closed at the high, follow through. New low, closed at the high, follow through. New low from the previous day, follow through. New low before the previous 4 day bars, closed at the high, 1.5 days of follow through. Okay, made a new low in here, bang, right out, attacking this resistance really hard. Really going to go, and it looks like we're going to push through this time. It's a final time. We may pull back just a little bit, and then whoosh, we should be away. And I kept saying to people, please do not sell this. It's multiple things it's telling you. They've got the double bottom, and all these spikes keep saying to you, it's rejected. And we'll keep making new lows, shaking people out, thinking, oh my god, we're going to go lower, and it's just not happening. Okay, this is a bull, and you should have been getting long. Under here when we broke this low, I said to get in here. I got triggered, and we came out for I can't, it was a small loss or a break-even trade before this followed through, unfortunately. But that's just the way it is. Not every trade's going to work. Not every trade's going to be a winner. Okay. Don't trade with the crowd, guys, because I can tell you now that the sentiment on Australia at the moment is 66% of people are short and 34% are long, and then 66% are short are going to get crushed, and they're all going to get stopped out. The market never goes in the direction of where most people are. Same for gold, 62% are short, 38% are long. They're also going to get crushed. Okay, so don't do it, guys. So I looked at Euro Australia, and when obviously I saw the double bottom on Australia, I also saw on a daily time frame a double top on Euro Australia, which to me confirmed the pattern. Okay, with a neckline below here, we could have had this trade here. Close. I wasn't running the room when I did this. I think I gave this one out as a free trade just before I started the room. Made a new high, closed fairly near the low, confirmed the double top. Sell stop below. 1 day straight down. We went 157.85, 155.74, 200 pip for 1 day. 1 day after we would have got triggered. Okay. Another one here, put a sell stop below. I think we did get triggered on this trade and got stopped. And we had another one under here where we could have made a new high, sell again. And look, guys, 154.80, to 151.90, nearly 300 pip fall in one day. Made a new high, closed at the low, retested first, broke through, bam. Look at this fall, guys. And I got shook out on this trade. I did make an error for the subscribers, just to show that nobody's perfect. Still make mistakes. We are human. But I actually looked at this on my phone from a 4-hour chart instead of a daily by mistake, and I lowered the stop to 151.75 while we're in the money, to 150.75. Sorry, and we got stopped out, and then I continued down to my target, which was about 148. I think it was about 148.40s or something like that, and we'll have hit that in just 2 days, basically straight down. Okay, so that was the reason why Australia looked short at the time being down here. Possibly could even come lower now if Australia is going to go up. But I looked at them both in combination with each other. Again, US Canada was a fantastic trade, but this set up right before I did the room. It's been in a massive long-term uptrend, okay, for 2 years now, longer. And people say, well, how would you know when to sell this? Well, you can look through multiple bars, okay, and there's not many that tell you to get short. Let's just go back for quite a while. So you had this over here, where you could say, okay, we've had a top here. You could say there's possibly a double top over here, because of it's being confirmed. We had a new high, close at the low, sell stop below. Guess what, guys? We didn't get triggered because the bar closed inside here. I would have said that we're trying to build momentum because it's inside the range. It's what we class as a pause bar, pause bar inside the previous daily range, building up momentum. So you could have said, well, we'll put a sell stop below here. Next day wasn't triggered. Another inside day bar, sell stop below. We had 1.5 days of follow through for a very small amount. The trade probably would have been made risk free, and I would have been cautious because look at all this support in here. I would have seen this here and thought, well, unless we break through this, it's not going to be confirmed. Okay, I could have looked at this one again, made a new high, close at the low, sell stop below, a little bit of follow through into support if you wanted to be just trading this like that. Okay, but I probably would have been at the moment just being a little bit cautious with this, and if I got this break of the neckline and then pull back, I would have been more looking over here to trade this. Okay, I would have been thinking, well, the double top's confirmed, we broke the neckline, we'll pull back into the resistance, we've made a new high over here, close at the low, I've had it sold below, a little bit of follow through, for 3 days down. Okay, the bars tell you when to enter the trades. Okay, you could have said over here, we're back into this double top area, made a new high, close at the low, sell stop below, bang, the market went the other way, would never have triggered us. Okay, again here, made a new high over here. There's no pattern to confirm this, so this wouldn't have been a trade I'd looked at, but I'm just trying to show you for illustration purposes that made a new high, closed at the low, sell stop below, market went the other way. We would never have got triggered. Okay, over here there was no new high over here, bar here, sell stop below, wouldn't have got triggered. Okay. There's no more bars, follow through. There's no bars where we made a new high and closed at the low all the way through here. This one here maybe, a little bit of follow through, probably would have got stopped out. And then we had this here where we're consolidating, we went like vertically up again into some massive resistance areas, okay? And we made a new high, perfect looking bar, closed right at the blood low. Okay, sell stop below would have been at around about 144.68. We're down to 142.30. 230 pips in 1 day. Okay, second day go down to 141 and another 120 pips. You see these moves, guys? They happen all the time. New high, close at the low, would have said, okay, the top's now in place. Sell stop below, probably would have got stopped out a little bit. Whatever they're expecting, I wouldn't have taken this one purely because I would have thought, well, we've already fallen 400 pips. We're probably going to put in some kind of double top before we continue. I didn't expect this to fall as hard as what we did. Okay, but you would have had a small loss. But this is what I'm saying. You can lose 60% of the time and still make a very good profit every single month. Okay, the worst month I've had is plus 300 pips. The best month is about plus 900. No losing months. so far. Okay, because the risk reward is just so good. Again, you could have traded this one, made a new high, closed at the low. Okay, sell below 137.41. Still 100 pips down in one day. You know, a quick 100 pips. We could have gathered. We might have even just set the stop to break even plus 10 or something and got stopped out and thought, oh well, we're going to go up now. And this just hasn't. And when I was looking at CAD yen, putting in the double bottom, and I was looking at also Euro Canada and a few of the other CAD pairs, I was thinking, well, if CAD yen's going to bounce, maybe then US Canada isn't going to. Made a new high, closed at the low, bang, follow through. You know, let's watch it happen, guys, when this happens, okay? Straight through, away. This consolidation here, I thought we might continue a bit further, and it'd be interesting to see what happens today with NFP. Let's just see how things go. Okay. I'm probably going to pause the recording in just a moment because I want to see the NFP results in 5 minutes time, because I'm obviously recording this live. I'm having to do it again because of last night's problems with the audio that some guys had. Australia, New Zealand, okay, massively long-term bear it's been. But, again, like I showed last night, there's a few patterns that look like this. First you've got an inverted head and shoulders. Left shoulder, head. Excuse the drones, guys, I'm not no artist or anything like that, but, you know, who cares? It doesn't matter. As long as it's for illustration purposes, it doesn't matter. Okay, we have this over here. So we're looking at this as a inverted head and shoulders, thinking that neckline is right the way up here, really. Some people would call it down here at 112, 113. I would say it's more up here because this is the shoulder here. But well, wherever you want to draw it, it doesn't really matter. At the end of the day, the pattern's there. It's confirmed. We're not breaking the lows. And you flick this down to a daily, and we've also got what's called a triple bottom in place more recently. Okay, so we'll have a low over here. We also have another low here, and these are higher lows. Okay, higher lows with inside a shoulder, inside the inverted head and shoulders complete pattern. And I've said to people for weeks now, please don't short this. You know, please look for opportunities to get long. You know, pull back here. Triple bottom was confirmed. Made a new low, close at the high, 2 days of follow through, 2.5 days really, you know, before we close like that. This one here, I was going to trade this, but it was on a Friday, gapping into Sunday, which is where we got the gap. I never trade on a Friday, rarely trade on a Sunday. If the market opens on Sunday and the bars from Friday are still confirmed because there's very little movement, then yes, I might enter a trade on Sunday night, I might recommend, but generally you get a bit whipsaw action, you get, you know, false breakouts through the things, and then the price retraces. So we did gap. I looked at this on Friday, thinking, this would be a good trade if it was any other day. Went up, filled the gap. New low, could have done it over here instead actually. 1 day, bang through. Now we're consolidating. If I would have had a buy stop somewhere above here, as we're trying to build up momentum, somewhere above here to break out, and continue up to at least test these 110.80 levels, you know, somewhere over here. But the longer term, this looks like it's going to come up and test the 113s, 114s, break through the neckline and probably up into about 117, 118 eventually, you know, maybe even 120 area. So there's multiple reasons that you're looking at. You're looking at bar confirmation and also some kind of other pattern or some other reason, you know, support, resistance, triple bottom, double tops, wedge patterns, you know, all kind of things. So that was at New Zealand. Let's have a look at Euro Canada. Flick up Euro Canada again. I told you obviously I had that top on US Canada, and obviously it looked like it was looking bearish. I'm not going to look at Pound Canada, but obviously that one, it's got a if you look on a daily chart, it's got a triple top look, break of the neckline, and it's had a huge fall. You know, the pattern's easily confirmed. But Euro Canada, you had a double top. Okay, break of the neckline underneath, break of the neckline under about 151, made a new high over here, close at the low, got a sell stop below, 1, 2, 3, 4 bars straight down, okay, bam, I'm thinking now that we're probably going to bounce, maybe retrace up to retest this neckline, which could be some euro powerful. I just need to pause this, guys, for 1 second while I watch this. Okay, sorry guys, I'm back. Obviously the NFP figures were much better than expected. We're being stopped out of gold and silver for locked-in gains. I've left open the euro and the US dollar Swissy trade, seeing whether the market's going to recover, whether we're just shaking people out, because that's what it does look like at the moment. I'm a bit unsure, so let's just let the market settle a little bit. But anyway, let's get back to where we were. So yeah, double top was confirmed, the neckline was broken. We had a quite good bit of follow through, and I was thinking when we started to consolidate here, we're going to retrace back to the neckline again, somewhere up in the 150 area. I'm not totally sure, so I've just left this alone at the moment until I can get a bit more extra confirmation in there, but that's what I'm thinking. Okay. What was the next chart that I had? I looked at pound yen. I'll look at US dollar Swissy because of, obviously I looked at euro and I said obviously it's reverse of it, and this is the one I liked first before I got involved with euro. But basically you had a double top on Swissy, okay, with the neckline down at 97.84, broke the neckline slightly, and now we've come back up into some kind of resistance area. And what we did when we saw this over here, I knew the double top was confirmed. I quite like this for, I saw this new high and closed at the low, and I put a sell stop below, didn't get triggered. Then I saw this bar inside here, which I thought was, inside the previous daily range, inside pause bar, whatever you want to call it. I put a sell stop just below, which I got triggered on. I recommended a 0.5% trade because I knew that euro had not set up at this point. Okay, euro had not set up the new low and closed at the high yet, so I recommended a 0.5% risk trade. But the stop was at 1. I made a mistake on the stop. The stop should have been 1.0018, and I put 1.00110. The market came within 1.5 pips, so we didn't get stopped. And this was again another secondary pause bar. And when we close like this is the same time that euro made a new high and closed at the low, and that was therefore I thought this is when it's going to move. So I got involved and I sold a second 0.5% to make a 1% trade of US dollar Swissy, and I also got involved in euro. Okay, we came right down, from 59.53 down to 98.91, and now we're bouncing and unfortunately taking out the highs. I'm still in this trade though. I'm going to wait and see how this bar closes today. If it closes like it is right now, then I'll be getting out the trade for a loss probably this evening, unfortunately. But that's just the way it is. The euro one's protected with a break-even stop, so that won't affect us at all. But this one looks a little bit different, so we'll just have to keep an eye on that over the next couple of days. Okay. Gold, bit of confusion at the moment. Can't decide what it wants to do. It's totally unsure. Just give me a second, guys, a minute. Okay, gold. Oops, that was not meant to happen. Gold I'd been talking about a while ago on Twitter before I started the room, and I saw a couple of things. First of all, I saw what I thought was a double bottom over here, but I could also see that the pattern was becoming really rounded, which usually means there's a low in place. Okay, and we had this resistance level. First of all, here really, just the strongest part. I had multiple attacks, a couple of times broke through. You could probably do a second one over here. We had multiple attacks, and we broke through. And I thought, wait till we pull back into the support. Once resistance now supports, so pull back into here. And I recommended somewhere in here, somewhere around about here to get long, with about 11.35 to 11.40 target, and we just whooshed straight out the top. I said we probably will eventually test this 1180, but I thought we'd come up here, we'd pull back again and then go, but this just kept on rolling. Another reason why, once you're in these trades, this probably would have been the best entry. This one here. Right above all the mess. Okay, right above all this area here, but new low, close at the high, entered, and you could have just keep moving your stop. Day by day, 1, 2, 3, 4, 5, 6. Put it under this bar here, and you would have got stopped at 1183. Got an extra $40 than what I got out of the trade. Okay, and all this thing about people saying can't buy the highs. Well, we did last night. Okay, I thought it was going to pull back, but I could see silver had pulled back to support, gold hadn't, and had this triangle pattern in an uptrend right at the top, which is a really bullish formation. Made a new low, closed at the high, and I said if we break the top of this, we're probably going to fly and fly quite quickly. Okay, we got long at 12.45. We hit 12.73, so we hit a $30 move, which is equivalent to about 300 pips in a Forex currency pair. Okay, I moved the stop eventually to 12.59 to lock in $14, and we've been stopped out on the NFP move. Okay, so I was thinking we might go up to 12.95 to test at this kind of level here, and we probably still will, but I don't want to sit while it jogs around anymore. It's a bit uncertain. Okay, the daily bar is saying that it's made a new high and it started to come right into the low, and I was thinking, oh, it's just it might come back down. So silver, same, called this long. Again down here, double bottom, consolidation phase, bit of a rounded bottom, not quite as good as gold, but the resistance really clear across here. See it? I changed the colour of that because you can't see it. The red. Okay, made a couple of attempts to break out, pull back, and then away we've gone. What we did, somebody said to me when we made this bar here, said, is this not a trade here because we made a new low, close at the high? Yes, you could have entered it here with a short stop and we bounced, but what I could see was that this was resisted for so long. I thought this will be support. I thought we might make a false move like that, pull back to here, and then go again, and we just didn't do so. When we consolidated inside this bar here, we didn't break the low of this. This bar here paused inside this range here. I said let's set a buy stop now above this bar at 15.03 and see how much follow through we're getting. We got up to 15.50. Okay, 47 cents, which again is a huge amount of move in silver. I was thinking we might come up to about 15.90, somewhere up in this high up, maybe a previous high over here, but that was the trade we've taken. We've just got stopped out. I moved this stop from 15.03 to 15.23. We made 20 cents on the trade, but it's a bit of a shame. Maybe I should have left it and just left the stop and then put it under this bar, but it would have been a break-even trade and we've managed to make some profit. I'll be a bit frustrated if this just continues out the top without us again. I'll have to adjust the way I do these stops if this does happen, because the overall analysis said that this was going up. I'll adjust that in the next few weeks if this gold and silver trade works out, and I should have had the stop under the daily bars. I'll adjust that for the weeks ahead. But at the minute, we've guaranteed quite a few pips. We've got booked nearly 200 pips for March already, just under 190 I think so far. A couple of open trades, one that's risk free, one that's in a small amount of loss, but still looks like it might be okay. So things are looking fairly good. Okay, let's have a look at a couple of the stock indices. SPX. These on a longer term time frame. At the minute, I've just looked at the retail traders, and 73% is short the S&P 500 and 27% are long. So that probably means that probably looks like we're going to continue high for a little bit longer, but basically you've got a longer term double top, bit of a broad top to be honest, but double top still there. Neckline originally was under here, with I suppose you could look at the extra support, which is where we're being supported again here, I've had a couple of attacks, and when we came down here and we bounced on the daily time frame, I thought that we're going to go up first, and knowing the market doesn't just fall, because everybody thinks, oh yes, the double tops in place, just going to fall away. So I've got to confuse people by going the other direction first. Obviously get this away from being so one-sided for the retail traders. Okay, so I said we'll probably at least come back into about 2,000 into this smallish double top area. So this was a double top here and a top over here, and possibly even a triple top, but this was like a neckline. So I said we'll at least come back up into here, to test here. But I think we'll probably come a little bit higher into like 240s, 2040, 2060, somewhere up in here, to really scare people. I mean, possibly even above 280, above these highs. People think, oh my god, we're going to go ridiculously crazy, and we're going to bust out, and that'll really shake people out of this. But the longer term bear pattern on the weekly time frame is that this is going to go down. It's got a long way to go. My target, if you want to know it, is 1600. That is my target. Okay. Sit and hold it for weeks if you want. If you want to just have a stop somewhere above 21, it's a big stop though. Above 21.14 somewhere up here. And you just want to sit and hold it and see. I mean, we could even come right back up in here and break this high, sit somewhere in here and then fall. So I'm really unsure. You just have to wait for the bars to confirm, but at the minute the double top's in place, and that looks pretty good to me. So, but that's my target, 1600 for the next, I don't know, 6 months to a year or so, possibly, to get down there. But looks fairly bad. And these are the things we look at all the time, guys. Again, I'll flip over to a stock, Apple stock. Tweeted this out a while ago. Say again, right at a high, shoulder, head, right shoulder, daily time frame, top, triple top on the daily with a neckline here, which first broke here, came back here, retested, fell really hard. Neckline for this shoulder is across here. We're already broken below it. We're being supported by this spike down here. Should at least come back up into about 104. Again, we might even come up higher into about 107 or even above 110 above this high here. So 110, 111 and come up. But eventually this pattern's confirmed, and what I noticed actually yesterday when I was looking at this a bit more depth, we've got a gap over here in the market. And you see these ones here have all been filled. This gap down there, pull back up. This gap down there, market pull back up. This gap down here, market pull back up. Gap in here, market pull back up. Gap down here, market pull back up. Gap up here, never filled. Okay, market will be remembering this break of this low here, 91, will probably take us into about 76, which is my target for Apple. Okay, 76 is the target for Apple shares. So if you want to buy Apple, I recommend you hang on. Please don't buy it now. Let's wait until get to 76, get yourself a better deal if you really like it for whatever reason. That's where we should be trading in the months ahead. Okay. So this doesn't just work for stocks, doesn't just work for currency, works for everything. Okay. Like they always say, pork bellies, orange juice, Coke, whatever it is, it doesn't matter what. This works over and over again. Okay. We do this consistently all the time. I said last night I had one guy that joined me in February. He stayed for 3 days, and it was the day that we had 5 losers on the belt in one day, and we lost. I forget what the losses were. I'll tell you in a minute. I just pull up the. We had, before I started the room, I had +2 on Australia, closer for a scratch, +74 on Euro Australia, +151 on Pound Canada. And these were all half-size positions, so even though the losses were like 40 odd pips, the actual losses were in half of that. So we lost 22 New Zealand, 29 Euro odd, 29 Euro Canada, 38 Euro New Zealand, 42 pound Swissy. Made +25 Australia, -20 Euro US dollar, +2 US dollar Swissy, -75 Euro card, -78 Euro US dollar, +185 CAD yen, -14 on Australia, +28 on New Zealand, and -18 pound US dollar. And that give us, in them last 10 days of, or 8 days or whatever of February, give us +116 pips for the trades that we took. Okay, and there was another trade that I called in a live session, Euro Canada. We'd already entered it once and we got stopped out for a small loss. And during the live room on the night time, I saw it setting up again with the inside day pause bar, and I said to them then, this looks like a good sell at 150.39 with a target of 148.36 for 203 pips. And those that attended the live session all took the trade and they gained it. I didn't add it into the results purely because I sent it out via email, and for some reason the email didn't send correctly and the rest of the members didn't get it, so I thought it was unfair to record it as in our results. But that would have given us a net gain of 319 pips for the month of February. That was towards the end of February. Okay, we didn't start till the 14th, so it would have been 319 pips if I'd included that trade as well, so that would have been the gains then. And we're up 190 pips so far in March. Every trade that we took yesterday was worked out to win, one was a scratch for break even, so it's been really, really good. Okay, so just like to say, you know, that this is what I offer. I also, there's a subscription page for the website. Just grab you the link. What it is 3 deals at the minute, which I'm going to leave on until Sunday the 6th of March, you know, till midnight, or probably early hours of Monday actually till I get up. This is a 1 month deal, which is $149 a month. The 3 month deal, which is a special offer, works out at $297 for the first 3 months and $149 after that. So you get, it's basically for $99 a month, you know, about £60 a month to get all these trades where you're going to get 300 to 600 pips a month on average. You know, it's not expensive. It takes 10 or 15 minutes a day to enter the trades. I send them every night between 10 and 11 PM UK time. Do a live webinar once a week. So I look at the markets on a weekly. There's no point in doing more than once a week because markets don't change on a daily time frame all that often. And then once or twice a month do a question and answer session, so anybody who's not sure about anything, wants to ask anything, wants us to look at anything that I haven't looked at myself, then they can do so and ask me to look at it. Okay. But basically they're just trying to get you the link. Okay, that's it there. www.forextraderoom.co.uk/#/subscription-options, and then that number there at the end, okay, /459-192-5484. If you type that in, it'll bring up these subscription options, and there's a 12-month one for $997, so you save about $600 on the yearly price. You know, if you were to pay this monthly one, you're saving about $680 if you did this one, which would work out $1,200. well, actually the first 3 months is $297, then $149, so you still save about just under $600 for the year if you take out the yearly option. And these ones will be available on an ongoing basis for the time being until I fill up the spaces that I've got. And this one's only available until Sunday night, early hours of Monday morning, the 997 because it's such a discount. You're getting it for, I think it works out about $81 a month, which is, you'll make that every month out of the profit that we'll make anyway. Okay, so I mean that's the subscription options there, but obviously the reason that I said I would cap it at a certain amount of people is because I'm on my own trading, and I need time to look at charts, I need time to answer questions and emails. I don't want people to be sitting waiting for 3 or 4 days for a reply. I want, somebody sends an email, I want to reply to them within 24 to 48 hours to get through them all. If anybody wants any help on Skype, or they want a one-to-one session in the live room at any point in time because they don't understand something, I want to be able to sit and spend time with them. I say, well, we do a live session once a week, but somebody says to me, well, I'm unsure, and I say, well, okay, let's this Saturday or Sunday, let's log into the room and let's go over things that you don't understand. I'll work one-to-one with you, share a screen and let's look over them. So I didn't really want too many people, but I know there was so many people that couldn't attend the webinar last night, which is either ones that couldn't get in, or there was some difficulties with the logging in feature, so people couldn't understand. So obviously that's why I've put these. That's why I've done the recording again. Look back over the charts, what we look at. Obviously saying that the risk reward is a minimum of 2 to 1, but usually it's 4 or 5 to 1 risk reward. And that's the kind of things we're going for all the time, to make a consistent gain of 400, 500, 600 pips a month usually. Sometimes a lot more, sometimes maybe as low as 300, but as I said, the gains are so great usually, that they outdo all the losers. Like I said, remember guys, you can lose 60% of the time and still make 300, 400, 500, 600 pips a month, because the risk reward is so great. So if you want a bit of do a day job, go out, come back in, receive an email saying buy stop euro 108.84 like last night, stop loss 108.27, sorry, target 110.67. Last night we raised it up to break even, paid the stop to 108.84, and we're now trading at 110.08. So all the trades are working out really, really great, guys. Gold, silver got stopped out for gains. Pound yen got stopped out for 140 pips, 0.5% risk, so 70 pips. US Canada got closed for a scratch. It's probably going into profit now. I'm just going to have a quick check when I can find US Canada. Can't find it. No, it's not yet, but looks like we might go in the next couple of days though. It's pausing inside this bar break of the low, would say has travelled down to about, I would say another couple of hundred pips lower, down to about 132.70 is where I think US Canada will probably head, somewhere in the region of there, I think. But anyway, that's what we've got, guys. So you've got till Sunday to subscribe, but please, if you've got any questions, email me at littlejohn@forextraderoom.co.uk. Okay, that's littlejohn at, okay, oops, and that's the Skype ID, Chris H9070. So email, Skype ID, you choose which one you want to do. Okay, contact me and I'll get back to you as quick as possible. But them subscription options, like I said, will only be available until I fill these remaining spaces. I probably will open it again in a few months' time once all my guys are settled and happy with everything. I might open it up to another 30 or 40 traders or so. I just don't want to get to huge level. You know, I would never want more than 60, 70 traders, because to answer emails as one person, to look for trades, to enter trades, to manage them all is it's hard work. And to be honest, I don't need the people. You know, I mean, I'm doing this because simply because, you know, trading alone for the last year and a half is it's pretty lonely. You know, making good profits, but I'd rather like to be able to show people, you know, what they can achieve. And as people know with Forex trading before, you know, I spent a lot of time and effort with people. You know, I give them any amount of time and day, so that's what I want to be able to do. And to do it for only 10 or 15 minutes a day, I mean, it takes me 2 or 3 hours to look through all the charts, to look for entries, to look for potential trades where the charts line up. But for you guys, it's 10 or 15 minutes. Get the email, enter the trades, go to bed, go to work, go out, go to the beach, or whatever you guys are doing. Come back, see whether you've made a profit, see if you had another email to say, oh, please close this trade, or just to stop. But the emails come out once per day, generally between 10 and 11 p.m. UK time. There was a couple of updates last night, early this morning, simply because of the NFP today. I recommend to close pound yen, but again, it was already locked in with a 100 pip gain anyway, so we'll close it for 140. So I mean, at the very worst, you might have got a little bit less, but it still looks okay. Okay. Speak to you later, guys. Goodbye.